Hi, good evening. This is Scott at Scott Trades on Twitter with StockMarketMentor.com and your chart of the day. Want to take a look at two kind of camping stocks. It seems like, summertime's here, the great outdoors. They're calling us. So let's take a look at two charts right now. This is THO Industries. Its ticker THO. So THO here, if I zoom in, kind of has a little bit of a cup with handle pattern. You can see, a little bit of a rounded bottom, little short shelf here, and yesterday moved up on higher than average volume. Today stopped right at resistance. Now this is a good thing because this gives us clearly defined levels to define our risk off of. So what I want to see here on THO Industries is a break of this resistance here. You can see how the stock stopped there, got rejected, came back, and so we're now here at a point where anyone who didn't sell here potentially could be selling here. And so we want to see a break above 118.90, a break and a hold above 118.90, because that means that anyone who bought here and then held through all of this is not going to sell to try and get back to break even. And that's kind of the psychology behind the cup and handle pattern. Now, and ideally, a cup and handle pattern is a little longer than a month and a half or so. But this looks pretty good. So, here on the daily chart, want to see a break above 118.90. And if we do break above that level on the daily chart, not only are we breaking above this resistance, but that takes us to a new weekly high here. So I like that here on THO Industries. I have an alert here at 118.90. And another camping stock, really quick, that I want to take a look at, WGO Industries. Its ticker WGO. So this one has a kind of a different pattern here. This one is closer to support. It's down here by the 200-day and the 50-day moving average. Now you can see here on WGO how yesterday, Monday, it took out, this kind of downward sloping trend line here. And when it did it on decent volume. Today, we moved above that level, did it on even higher volume. So there's more volume coming into this stock. And what I like about this setup specifically is, number one, it's different from the last one that I showed you. But with this one, we're really close to support. So you could buy the stock here and put a stop just below the 50-day moving average. Now, that's about 8% risk. So you'd want to manage your position size because that's almost 6 points that you're giving up. And, for me, that's kind of a lot. So if I'm risking that much to start a position, I usually like to manage my size a little better and have a smaller position size. So I'm okay with a little bit of gyration back and forth as long as we're staying above this low right here. Because this low right here established support, and it's a higher low compared to these down here. So want to see a move above 66, let's say 66.30 here on WGO. And again, you'd want to stop just below the low here. That's around 60.86. And again, that's risking about 8% or so. So there's two trading ideas to get you in the summertime mood and hopefully out of the house. Be sure and sign up for Dan Fitzpatrick's free stock chart of the day at StockMarketMentor.com and give me a follow on Twitter if you don't already, at Scott Trades. We'll see you next time.